April 2nd, 2025, Donald Trump announces Liberation Day, tariffs on almost all countries of the world. From January to April 2025, the average applied United States tariff rate rose from 2.5% to as high as 170%, the highest level in more than a century. After subsequent changes and negotiations, the overall average effective tariff rate stood at 16.8% as of November 2025, from 2.5% to 170% in 3 months, a 68-fold increase. The effective United States tariff rate in November was nearly 17%. 7 times higher than the January average, and the highest since 1935. For comparison, in 2018, during Trump's first term, tariffs rose to approximately 3 to 4%. Now they are 5 to 6 times higher. This is the largest tax increase since the Great Depression, a chaotic start. Trump began with the largest trading partners, Canada, Mexico, and China. February 2025, 25% tariffs on Canada and Mexico, 10% on China. The reason? Trump demanded an end to illegal immigration and fentanyl flows. Canada and Mexico responded with retaliatory tariffs. A trade war began. April 2025. Liberation Day. Trump's trade wars reached new heights in April. The president introduced sweeping Liberation Day tariffs on nearly every country in the world, crashing the stock market. Base tariffs for everyone. The European Union 10%, Japan 20%, later reduced to 15%. The United Kingdom 10%, Brazil 10%, later 50%. All others 10 to 20%. Special punitive tariffs. China 30 to 145%, changed several times. Pharmaceuticals threatened at 100 to 250%. Semiconductors threatened at 100%. Automobiles 25 to 100%. Furniture and cabinets 25%. Films threatened at 100%. Trump also proposed tariffs to punish American companies that move production abroad, such as a 200% tariff on John Deere, a crazy escalation with China. On April 2nd, the United States added a 34% reciprocal tariff on most Chinese imports, which China mirrored on April 10th. On April 8th, 2025, the United States raised tariffs by another 50%, bringing the base level to 104%. China mirrored this, raising its base tariff to 84%. The United States then raised tariffs to 145%, and on April 11th, China again matched the move. Escalation over 10 days. Day 1, United States 34%, China 34%. Day 6, United States 104%, China 84%. Day 9, United States 145%, China 145%. The tariff war turned into a mad auction. Who could go higher? Rare earths. China's counterattack. China began requiring export licenses for 6 rare earth elements and rare earth magnets, 100% and 90% of which were produced in China respectively. Licenses were delayed, as China effectively halted all exports. Rare earths are critical for batteries, motors, weapons, and medical equipment. China controls 90 to 100% of production. Stopping exports means stopping American factories. Tesla, Apple, and defense contractors all depend on Chinese rare earths. Chaos and uncertainty. The kaleidoscope of tariffs, switched on and off, and retaliatory responses caused widespread uncertainty for businesses and consumers. Trump announced a tariff. A week later, he canceled it. A month later, he introduced a new one. Companies did not know whether to plan for 10% or 100%. Investors did not know whether to buy or sell. By the end of March, the Economic Policy Uncertainty Index reached its highest level since the start of the COVID-19 pandemic, doubling since early January. Treasury revenues surged. United States tariff revenues exceeded $30 billion per month, compared with less than $10 billion per month in 2024. By December 2025, tariffs had generated $250 billion in revenue for the United States government. $250 billion in 1 year. In 2024, it was $70 to $80 billion, a threefold increase. The federal government collected $195 billion in customs duties in fiscal year 2025, more than 250% of what it collected in the previous fiscal year. Trump claimed tariffs will replace the income tax. Trump proposed replacing income taxes with tariff revenues, an idea that economists at the Tax Foundation called mathematically impossible. Why is it impossible? Income taxes generate more than $2 trillion per year. Tariffs generate $250 billion. That covers 12%. Tariffs would need to be raised to 200 to 300% on everything to compensate, but at such tariff levels, imports would collapse, leading to less revenue, not more. The economic truth. Americans pay the tariffs. Trump says China pays the tariffs. That is not true. American importers pay tariffs when goods enter the country. They then pass the cost on to consumers through higher prices. Trump IS tariffs amount to an average tax increase of $1,100 per American household in 2025 and $1,400 in 2026. $1,100 to $1,400 in additional taxes on the average family. This is a hidden tax through higher prices. Trump IS tariffs represent the largest tax increase in the United States as a share of gross domestic product, 0.47% in 2025 since 1993. What has become more expensive? First, automobiles. A 25% tariff on Canada and Mexico will raise production costs for American automakers, adding up to $3,000 to the price of some of the roughly 16 million vehicles sold in the United States each year. The United States imports about half of its auto parts from Canada and Mexico. A 25% tariff means car prices are $2,000 to $3,000 higher. Ford, General Motors, and Tesla all assemble vehicles using parts from around the world. Tariffs hit everyone. Second, gasoline. Gasoline prices could jump by 50 cents per gallon in the Midwest, since Canada and Mexico supply more than 70% of crude oil imports to United States refineries. An additional $0.50 per gallon. The average family uses about 15 gallons per week. That is $30 more per month, or $360 more per year on gasoline alone. Third, food. Mexico is the largest supplier of fruits and vegetables to the United States. Avocados, tomatoes, berries, limes. A 25% tariff means higher prices. Canada supplies beef and pork. A 25% tariff means more expensive meat. Fourth, electronics. China produces most electronics: iPhones, laptops, televisions, game consoles. A 30 to 145% tariff on China means everything costs more. Apple is trying to avoid tariffs by promising to build factories in the United States. Trump mentioned Apple Incorporated, which committed to investing $100 billion over 4 years in United States manufacturing, as a possible exception. But building factories takes years. In the meantime, prices rise. Fifth, furniture. On September 29th, Trump announced 25% tariffs on kitchen cabinets, bathroom furniture, and upholstered furniture, taking effect on October 14th. Want a new kitchen? Add 25% to the price. Sixth, toys. Trump initially threatened to impose 100% tariffs on toy maker Mattel after the company said it would diversify production to other countries, but not to the United States. Barbie, Hot Wheels, and Fisher-Price are all made in Asia. Tariffs mean more expensive toys. Who suffers the most? In 2026, the top 1% will see a smaller decline in after-tax income. The wealthy spend a smaller share of their income on everyday consumer goods. For them, $1,400 is insignificant. Low-income households and the middle class spend a larger share on food, clothing, electronics, and cars, exactly the categories that became more expensive. Tariffs are a regressive tax. The poor pay more as a share of income. Companies also suffer, not only consumers. Companies pay tariffs on imported components. Boeing imports aircraft parts. Caterpillar imports parts for tractors. Intel imports components for chips. A tariff raises costs, forcing companies to either raise prices, hurting consumers, or reduce profits, hurting shareholders, or lay off workers, hurting employees. Economic policy uncertainty will reduce investment by about 4.4% in 2025. Companies do not invest when they do not know what tariffs will be tomorrow. Inflation returns. Core personal consumption expenditures. Inflation, closely watched by the Federal Reserve, is projected to rise in the first quarter of 2026 due to tariffs and immigration restrictions. Inflation fell from 9% in 2022 to 2.7% in 2025. But tariffs reversed the trend. The main reason core personal consumption expenditures inflation remained elevated at 2.8% in 2025 is the pass-through of tariffs. Without tariffs, inflation would have been 2.3%. With tariffs, it is 2.8%. An additional 0.5% from tariffs alone. In 2026, inflation is expected to rise above 3%. The Federal Reserve will not be able to cut rates. The economy slows, but inflation rises. Stagflation, the worst of both worlds. Has the United States trade deficit declined? Trump promised tariffs will reduce the trade deficit. The United States trade deficit did shrink significantly from the beginning of the year. The trade gap reached a monthly record of $136.4 billion in March, when consumers and businesses rushed to import foreign goods before Trump imposed tariffs. The trade gap narrowed to $52.8 billion in September, from $136 billion to $53 billion. Wow. Success? Not exactly. March was an artificial peak. Companies massively imported ahead of tariffs, a process known as front-loading. September reflects a collapse in imports because everything had already been imported in March, and tariffs made imports more expensive. But the annual deficit was still 17% higher than in January through September of 2024. Over the year, the deficit increased rather than decreased. Why? Because the United States does not produce most of what it imports. If it does not buy from China, it buys from Vietnam, India, or Mexico. More expensive, but it still buys. The deficit is determined by macroeconomics, savings versus investment, not by tariffs. Global pain. Switzerland. The Swiss economy contracted in the third quarter at the sharpest pace since the peak of the COVID-19 pandemic in 2020. The government attributed the contraction mainly to a collapse in chemical and pharmaceutical production, noting recent volatility in foreign trade linked to new United States tariffs. Swiss pharmaceutical companies such as Roche and Novartis export to the United States. Tariffs lead to falling exports, and the economy enters recession. Brazil. United States imports of coffee from the world's largest producer fell by more than half in the August to November period, compared with a year earlier. The decline contributed to a 32.2% drop in Brazilian coffee sales to the United States since the start of 2025. Brazilian coffee down by 50%, tariffs on coffee and uncertainty. Coffee production accounts for 1.8% of Brazil's gross domestic product. Falling exports mean recession in the coffee sector. Europe tariffs have already had a significant impact on activity in the euro area. We expect activity to slow in the second half of the year, with negative direct and indirect effects from tariffs. European companies such as BMW, Volkswagen, and Airbus export to the United States. Tariffs lead to lower exports and slower growth. Japan. The Trump administration reached a trade agreement with Japan. Tariffs on Japanese goods, including automobiles, will be set at 15%, significantly below the 25% figure previously discussed. Japan bought itself a deal. Tariffs were reduced from 25% to 15%, but they are still 6 times higher than before Trump, when they were 2.5%. China is the main victim. Trump's policy in 2025 affected almost every country in the world, including America's largest trading partners, but it had the greatest impact on United States trade with China, once the largest source of American imports, and now number 3 after Canada and Mexico. China fell from number 1 to number 3 in United States imports. United States tariffs on Chinese imports now average 47.5%, a 47.5% average tariff. Nearly half the price of a product is tax. Chinese companies are moving production to Vietnam, India, and Mexico to bypass tariffs. But this requires time and money. Stock market panic and volatility. For investors, the most volatile moments in the stock market this year coincided with the most volatile moments of Trump's tariffs. The S&P 500 posted its largest daily and weekly swings in April, and its largest monthly losses and gains in March and June, respectively. April, Liberation Day, the S&P 500 fell 8% in one day, the largest drop since March 2020. Investors do not know what to do. Tariffs change every week. Planning is impossible. Long-term damage to the economy. Trump's tariffs, as of December 28, 2025, will reduce long-term gross domestic product by approximately 6% and wages by 5%. A household with average income will face a lifetime loss of $22,000, minus 6% of gross domestic product. That is $1.5 trillion of lost economic output per year, minus 5% of wages. The average family loses $22,000 over a lifetime. These losses are twice as large as those from an equivalent revenue-raising increase in the corporate tax rate from 21% to 36%, which is otherwise considered a highly distortive tax. Tariffs are more harmful than doubling the corporate tax because tariffs distort trade, break supply chains, reduce competition, increase uncertainty, and cut investment. What comes next? 3 scenarios. Scenario 1, deals and de-escalation, the most likely. Trump uses tariffs as leverage for negotiations. He threatens 100% and agrees to 15 to 20%. Japan, the United Kingdom, and some European Union countries have already secured deals. Tariffs have been reduced. By the end of 2026, the average effective tariff could be 10 to 12%, still 4 times higher than under Biden, but not 17%. For people, prices stabilize but remain 5 to 10% higher than without tariffs. Inflation slowly declines. Scenario 2, escalation, risk 20 to 30%. China does not give in. Trump raises tariffs to 200% or more. China responds. A full trade war. Imports from China collapse. Companies relocate production, but this takes years. Goods shortages. Prices surge. For people, inflation above 5%, shortages of electronics, toys, and clothing. Recession is possible. Scenario 3. Reversal. Risk 10%. Courts rule that IEEPA tariffs are illegal, or a new president in 2029 cancels everything. The Supreme Court could overturn some or all IEEPA tariffs. Tariffs are removed, prices fall, trade recovers. For people, relief, but the economy has already suffered damage. Years were lost to chaos. Final thought. Trump promised, tariffs will make America rich. Reality, prices higher by $1,100 to $1,400 per family. Gross domestic product lower by 6%, wages lower by 5%, inflation higher, investment lower, uncertainty at the highest level in decades. Trump acknowledged that tariffs may cause some pain for Americans, but said it is necessary. Some pain means $22,000 in lifetime losses for the average family. Trade wars have no winners, only losers. The United States pays through higher prices. China pays through lost market access. Europe, Brazil, and Switzerland pay through recessions. Tariffs of 100 to 170% are not economic policy. They are economic vandalism, and ordinary people on both sides of the ocean pay the price.